Welcome everyone, this is Scramble and I would like to thank you for giving me the chance to share with you my technical analysis on BTC. The current situation of the market is having specific details which are balancing the prediction to the bearish side. Behind my statement, there is a large quantity of data researched on the technical. So today we're going to talk about that over the next few minutes. In the meantime, you can hit the like button and subscribe to my channel if you would like to find out more. So let's get into this. 24 hours volume have decreased as overall. It used to be about 170, 180 billion as all-time high for the last 2 weeks. Attention. While the market cap is 167 billion and it found resistance at 170, today we have formed another lower position, which is confirming the bearish domination environment we're into. Because if you remember, there was people discussing a couple of days ago that we're about to get on the track up to $7,000, which is a major resistance, break out of that and back to 10,000 due to the fact that people will find security and will join cryptocurrency investments. Well, that thing does not seem to happen, and usually in order to have people investing, we need stability. One of the stabilities can be found into markets which have a high probability rate. Now, currently Bitcoin is definitely affected by the movements of the social issues related to coronavirus and the entire world economical system, which is suffering. Therefore, we're suffering too. Very simple. There is no energy which is looking to buy that hard compared to the ones looking to sell out and transform their Bitcoins, their cryptocurrencies, into other fiat currencies which they're using on traditional markets to buy goods and services, and more likely to find security. And let me tell you one thing before we get into the technicals, because this thing is going to explode whenever the market is going to find stability again. People will jump back into the crypto, seeing great prices, they will buy heavily. So in the future, when things will slow down, we reach a high predictable level, things will pick up nicely. But we have to see the stock market as well, the traditional markets, getting back on track, because right now everything is going side by side. So here we go with everything that I would like to talk about. We're not going to start on one-day candlestick. We're going to start on short-term candlesticks, which is 15 minutes, guys. So we're looking at the charts here. Every single candlestick is representing 15 minutes. Let me just zoom in more for this one to have a better view on it. There you go. So what you see here is, I'm going to start with 2 lines. The one which is supporting a channel which has been forming a uptrending direction is called the support trending line. Finding confirmations right there quite nicely. Here, finding as well, but getting suppressed from the resistance line, which is hitting it from the top. And you can see it right there. That's very simple. Well, forming here a gap between our support line and where the market is moving. Afterwards, this gap has been filled with charts, right? Which means that the market has been suppressed, pushed closer and closer to the support line, preparing for a breakdown that is happening here at the end. Let me just clear up the screen a little and talk about it. So at the end here, it's happening, the breakdown. Market is crashing below the support line and forming from there continuous selling pressure domination under the power of the resistances and the bearish energy. On the other side, the stock market is suffering too this day, so it's going hand by hand. This is the 15-minute candlestick, guys, which is great for day trading. Now, what you need to consider here while looking at this chart is the Fibonacci retracement lines, which are all these lines representing a different color. This is a tool which helps us to see the meaningful points of the market for the current scenario. The meaningful points of the market where we could expect actions depending from where we touch the line. So right now, we're very close to 0.618 Fibonacci retracement line, which is activating as a support. Take a look at that. It was doing very nicely. But now it seems to be under heavy pressure and it could fail, which is the possibility as of right now. Failure could drive us down to 0.5, which is the next target at 5,600, 5,500, and then 0.3082, which is 5,300. So those are the lines for a short term, especially for day traders. You could consider buying long, holding a little until you get your targets, which might be 0.2, 0.3, 0.5%, which is, by the way, very good if you multiply that on leverage trading. That's awesome. If you know how to trade with leverage, that's, incredibly good today because there is enough volume. The platforms are working fine. You have stability from the media perspective as well, and the infrastructure is providing you. So that's fine. You can definitely do it. And the 0.236 as well, which is the next target, and it's the 5,000. Now, wondering for the 5,000, the first target, first case is at 3.7, the next target is as 8.6, and the third target is at 14.4 in the way the market looks right now. And by the way, if I didn't mention until now, make sure you check out scramblecoaching.com, the place where you can join my private coaching program and become my one-on-one student. This is the place I'm teaching people how to trade from A to Z. We have 3 stages. It's one-on-one with me, and it's during 4 weeks intensive coaching program, teaching everything. So far, we have successfully teaching 136 students since 2017. Beautiful. So getting back to the charts, this is the current situation with the 15-minute candlestick short-term discussion. Going towards to the medium-term discussion, which is beautiful full swing trading. Here we have 2-hour details, 2-hour candlesticks. And we have a highly important trending line, which is not a support, not a resistance right now. It's called a important trending line, simply, just like that. It's playing the role of Jolly Joker, which means that it goes along with the energy which dominates in the current scenario. But it could change in the future, just like it did it right here. Supporting, look at that, supporting, failing to support, breaking below, acting as a resistance, acting a resistance. The same line, which is having 2 different roles. This is very, very important. Now, seeing the number of confirmations that we have here on the lower side, as well as the history of this trending line, which is active since 15th of February, we have a month and a week. Well, it still reacts here on 20th of March very strongly on it. You see that it is oriented downwards, which means that from now there are high probabilities to go down the way and again touch the $5,000 level. We might need to struggle again with the $4,000 somewhere right there. Another thing that needs to be kept in mind, which is shared during this 2-hour candlestick, is the lower high confirmation bulls failure, and it's this top here. You need to compare that top with the previous top, which is higher. So that means we tried to come back and establish a breakout out of the line and get closer to the previous top, get out of it, which would trigger a signal of a strong entry for the bulls. It failed, and afterwards the natural reaction of a bullish failure, which is a sell-off and the bearish domination. What you see here on the bottom side of the screen is a red line that goes left and right, back and forth, up and down, just like that. This pattern is this indicator is very similar to the RSI. RSI indicator is sharing with us the dominant energy representation. So who is the dominant energy? That is the one who is drawing the line in that direction. So for example, if the RSX, which is this current indicator, very similar to RSI, but a lot better, just like you can see it here, this is the main you can find inside the indicators. You go in to the public library, or you can say whatever you want, and you say RSX, and it's directly from the Lazy Bear, 2,203 likes. This is the one I utilize right here, which shares with you the overbought or oversold areas where the market is reacting. Whatever is above 70, this red line, is representing overbought area. Whatever is below 30 is representing oversold, and the market needs to come back. Well, when it's at the top, the market needs to decrease. Take a look at it. It just happened quite a few times here. And for example, here, the RSX was sitting at 83, which is a lot on overbought. And afterwards, this is basically exactly where the RSX was sitting on, and afterwards the RSX have decreased while the market had a seismic movement, but directly it crashed. So without any other discussion, the market was capitulating on that. What we have to do here is to consider that there is a pattern with the RSX, which we can see here, that's called bearish, guys. That's totally bearish, that pattern right there. Due to the fact that we're establishing this top below 60 right after we are having a difficult movement above 80. The difficult movement above 80 is confirmed by the second movement right here, second top, that is creation at a lower point. So we have the first one on a top, lower point, and then another one in an even lower point. Therefore, the market is continuing its crash towards, and it's finding difficulties to establish in a bullish direction. What we have to expect here is another sell-off in the way the market looks right now. Going towards the one-day candlestick is, just a very similar situation to what I've been speaking in my last video. We have all three moving averages, which are 50 days, 100 days, and 200 days, oriented downwards, squeezing up, and having the crosses happening very soon. We also have a massive rejection, which is proved by the long-legged doji, which is appearing here, and it's not easy to figure it out. And afterwards, the bull's failure confirmed with the upper shadows on the red candlesticks, and it's basically today's movement. So today we've actually confirmed another bearish movement, and that's obviously not fun at all. And we have to see how this plays out, because our limit right now is $6,000. If we don't break out fast on 6,000, we go to 5. Very simple. This is how charts are setting up for the moment. On the other side, that's all about today's video. That's pretty much all about. Just right here at the end for another second, for those who are looking to get started, make sure you check out the private coaching program, where we learn based on 3 stages. Psychology is the first stage, technical analysis is the second stage, and the third one is the live trading. So once you complete this together one-on-one on Skype lessons, you are ready to go. You can also register now if you want to find out more, because you can qualify for a free conversation with me on Skype of 15 minutes where I can explain you more if you want that. So once again, guys, make sure you hit the like button, subscribe to my channel, and I see you in my next videos. Thank you, take care, and respect the authorities and their advising messages, guys. It's a very, very difficult context with the coronavirus, and we definitely need to respect the rules right now, as well as be smart, because otherwise we'll have to suffer a lot, which is not something we like to, and the costs are way higher if we do not respect the rules. So not even need to talk about it, down to any type of mind, any type of age. It's very simple. We need to avoid coronavirus to spread all around the world. So stick together, take care, and I see you in my next videos.